We all want you to be successful. And it's way easier for us to do this Zoom, educate, share our knowledge, and prevent issues versus fix if something goes wrong. We have amazing people with us today, and Jess will be with us for only minutes. So we will go start with him first. He is a professional underwriter. He works with Mychele a lot, and I'm pretty sure with many of you guys. He underwrites large assets and businesses, and he can share more about what he does. And also
Think.
what issues you come across, red flags. I'm pretty sure that a lot of issue that people got, you could prevent it if they just asked, right? So tell
Yeah.
us who you are and what do you do?
Sure. My name is Jasdev Kailey. I see a lot of familiar faces on here. So hello to everyone. I'll give a quick background. My past, I was a SBA loan underwriter. So every day I would come to my desk and underwrite businesses. And my job was to assess risk with the actual business that we may be funding, assess risk with the actual guarantors of that business. So I got a lot of technical knowledge from there, and that's really where my underwriting stems from, all coming from commercial banking. And I think it's extremely important that we're having these conversations. So I'll say my heavy focus is a lot more on the financial due diligence, the financial underwriting. I don't want to sit here and paint the picture that it starts and stops with somebody that just looks at financials. I just want to make the point that it's not something to gloss over. And actually, the best way to go through anything is when you pair up a numbers geek like myself, and then you pair it up with an operator that you trust as well, like a Mychele or a Tyler or somebody doing these large assets, and that they can come in and then you put this full story together. You get to put the numbers with the story that's being told, and you got the checking the financial statements along with knowing the operations from other experienced people. So just going back to some of the stuff that I look at, and it's really hard to, in a short amount of time, to say, well, this is exactly how you go underwrite, because everybody has a different process. And also, everybody has a very different investment strategy. Somebody like myself who wants to invest in businesses, I want cash flow day one where somebody Pace or somebody else with a lot more resources might want to look for more of a turnaround business, whatever that might be, a large asset, real estate asset. And so you have to look at your investment strategy and then pair up your underwriting to that. But again, I was actually really happy to be invited to jump on this call because I'm really passionate about this topic. One of the biggest reasons why I still underwrite, even though I'm not in my W-2, is one of the things that I had to do in my role at the bank was I had to make the phone call to our clients at the bank who already have loans. So people in our current loan portfolio that started to miss their payments, that were starting to get behind, and we knew they were going to default at some point. At least that was what was in our head. And those were the worst phone calls to ever make because I'm making the phone call trying to figure out what went wrong when they were all very excited at one point. You can only imagine somebody who was trying to get into this business acquisition or large asset acquisition. In the beginning, we're all excited. We envisioned this bright future. And then now fast forward 6 months, 18 months, 24 months, and you got me calling you on the phone saying, what the heck happened? Why are you not making your payments? And I know that they have a personal guarantee on this loan. They've pledged their personal home. And I'm just trying to paint the picture that it can be scary, but if you do the steps and you don't gloss over these very important steps in the beginning, you want to avoid that at all costs. And that's why I still like to do this type of work and want to help educate others. But I think for the most part, one of the things that I learned in commercial banking, the best predictor of the future is by looking at the past. So some of the common frameworks that happens in underwriting, and one thing I really focus in on is looking at historical financials. For me, it's huge. Even though we're all smart people here, we know we can turn around the business. I think some of us are a lot more confident in that. And Mike, I have to set some expectations, but I think you want to make sure you understand the past. You want to know what the actual expenses were. Look, if you're buying a huge property and you think you can just cut utility expenses overnight when you take over, usually that's not the case. Sure, there's some operation efficiencies you can do, and some stuff takes time. But what I would like to focus in on today is the stuff I collect up front to at least begin the underwriting process. And for me, coming from commercial banking, it was always standard for us to look back 3 years. So it was always 3 years P&Ls. That gives us at least enough runway to see some ups and downs and maybe some season trends that have happened over any sort of I underwrote, whether it was an RV park or a gas station or a liquor store or whatever I was looking at that time. Speaking to some other people in the private equity group, I guess it's more common in private equity look at 5 years and to each their own. I would say probably stick to about 3 years worth of historical financials. And when I say historical financials, I'm specifically talking about profit and loss statements. At least that will get you to understand the cash flow, also efficiencies, wherever we think that we're going to be able to cut down on certain expenses. And then balance sheets are also really important. And I don't mean to get too technical on this call, but balance sheets are really important. They're also can balance sheets just your assets and your liabilities, and then trying to figure out what the net worth is of that business. So it's very important if you're going to do any sort of creative structure to look at the balance sheets, if you're going to assume any loans, if you're going to have a buy-in on the LLC. But a lot of the times we'll just do a straight real estate purchase. We're not assuming loans. If that's the case, then maybe it's not as important. So what I do like to look at is I will always collect 3 years worth of P&Ls, 3 years worth of balance sheets if we're going to do anything creative or assume any loans.
And we can share checklists that you shared right with
Hmm.
me that I know a lot of people is he talking about, but when we talk about larger assets, it's really important to know what you're looking at and to have someone who actually will be on your side telling you the truth. Because a lot of people come excited of income of the park or business, but we need to be conservative.
For sure. For
So.
sure. I think I kill a lot more deals than give thumbs up on because as an underwriter, and this is the point where you really should be the most conservative, the most critical. We should stay optimists and all that. I think it's really important in business in general, but there is a point in time to really become harsh, and I think it is looking at the historicals. And one thing I will say is I start with the historical analysis to figure out what the business is as is. And for most investors, and that's not everybody, we would probably make an offer based off the as is performance of the asset, not based off the pro forma that the broker's trying to tell you and seller's trying to tell you, well, what it could be. We like to put our offer based off the historicals. So this is another real big reason why it's really important to understand what the business is currently doing today. Because even though we're going to make improvements, we want to pay today's money, not this hypothetical future performance of the business. So another thing I want to touch on is how does I like referencing bank underwriting. We might hate banks in this group, or some of us who want to do creative, but I think it's really good to understand at least what their process is, and we can take some of the pros of their process. And one of the things that banks are really strict on is this underwriting phase. So one common thing I like to tell people is types of financials we may get. A profit and loss statement, in reality, how do we know if it's reliable or not? And honestly, I don't have a perfect answer to this. I can tell from my experience just to see how much details are in there, or if it's just an asset that I'm very comfortable with. My background's in gas stations, working with lot more RV park investors. Just because I've seen 20, 30, 50 deals by now, I can compare and know what's being left out. But in general, the most reliable document that we'll probably get is going to be a business tax return. So the reason why banks look at this as being more reliable than your typical profit and loss statement, it's just this concept that you are submitting a formal document to the
Sir, I'm good,
and
man. Thank you. Have a good day, then. You too.
you're submitting a formal document to the IRS. Hopefully, a CPA prepared it. So, just with those few extra steps, the general thought process that it's probably a more reliable document. You should value that more than a P&L from a reliability standpoint. Why I still like profit and loss statements is because there's usually a better breakout. You get to see more expenses and you get to see more items on a profit and loss.
As bogus proof. It's a
Can
surefire
we mute
tactic
our
for selling
mics?
new
Do we have
furnaces.
a way to mute? Thank you. So, business tax returns, profit and loss statements, And here's the reality. The reality is the broker probably controls most of what we get. So a lot of times when we're doing our underwriting, we're lucky if we get profit and loss statements, and we're lucky that we get more than just an offering memorandum. And P&Ls in general, they come out of QuickBooks. They can be easily manipulated. So it's the concept of going with trust but verify. So in the beginning, it's hard to verify everything. Look, speed always matters when we're buying businesses, buying RV parks, being in the creative community, if you're in Pace's community. And he's going to do another RV park Zoom. So just assume that there's going to be a lot more influx of everybody calling out for RV parks. So now speed is going to matter even more. So sometimes we have to make offers based off just what we can get. So sometimes that's P&Ls and it's okay. Just know that this due diligence doesn't necessarily stop right away in the underwriting, that it's a trust but verify process. So you can verify later. But now I'm probably getting too much into the acquisition piece of it, and I want to stick towards the underwriting. But that's my typical thought process. I want to have 3 years worth of P&Ls. If I'm going to do anything creative and assume any loans, I want 3 years worth of balance sheets. And then really good if you can also get 3 years worth of business tax returns, just because they're known to be a more reliable document. Maybe less detailed than a profit and loss, but more reliable.
Can I ask questions?
Let's do it.
So if I was a new investor and I was looking at going into, say, an RV park, why would it be beneficial for me to have an underwriter write it as opposed to me taking a Zoom class and learning how to do it myself and thinking that I know what I'm doing?
Repetitions. I think it's repetition. It's somebody that has been able to look over multiple deals. The best thing is, look, anybody can learn underwriting on YouTube University, but we're dealing with really large assets. Just to kind of go back to Michelle, it's these things, they're huge assets, they're big responsibilities. Sure, there's some sort of buffer, but that buffer can go away really quick. Like we're buying large assets with a lot of infrastructure. I forgot, didn't you leak on one of your properties? Well, it was something ridiculous, right? Stuff that we
Yeah.
don't, un you would never guess.
$20,000 later.
So when you underwrite, it's very important that you're not on tight margins. And if you miscalculate any of that stuff, you could get to a point where you think it's a thumbs up when it should have been probably a pass. And look for the next asset.
And on top of that, I do have to say one of the things that I do think is beneficial is having somebody, especially when you're in such a large asset class, having somebody who has understood how they should be structured out. Because I know that you and Patrick are on the phone all week long
Yeah.
talking about just structure of how that should look and what that debt service will look like and what you should be putting away for that asset and how that all works together and how it works for our business in general. And as a brand new investor, that conversation I think is the most important conversation.
That's what you said just a second ago about how if it's close, then it's not. That's so true because there's always going to be something that happens. Shell had the pond happen. Something always happens. Just expect it. So if you're in a sunny day scenario and that's all it's going to work out on, you may as well look the other way because there's going to be a problem that you hadn't seen even if you underwrote it correctly.
I think this is huge with us being, so I underwrite just regular service-based businesses as well. I actually don't focus too, look, margins are still very important, but if your AC breaks, your landlord's going to fix it. We're our own landlords, right? In these types of assets. It gets expensive very quickly.
Can I also state that I think that being that you see these assets all the time, the things that people aren't accounting for. I saw a post the other day about
More like caramel or
Somebody's ordering something.
But somebody posted the other day and they were like, oh my God, I'm closing on this RV park. And I didn't realize that there was a $20,000 utility deposit that I have to put in. Now, I'm going to tell you, it's dependent on the percentage of what they believe you're going to use. I've had one for $60,000 before. And if you don't underwrite it and your margins are close, you're not expecting them to take 60 grand and hold it for the next 2 years. You could break your deal if you're not paying attention.
And actually, that's where I also think it's really important to speak. I'm one piece. If I'm going to RV parks, I'm definitely calling Michelle, Renda, Patrick before I even touch anything because there's going to be something that's beyond a P&L, right? If I'm going to mobile home parks or something, I'm calling Tyler or somebody else that's doing the thing because there's stuff this is where I always say underwriting is best when you have your numbers geek and then you have your operator both and you have both resources to talk because now you get a much better picture of everything. the utility deposit's something that doesn't show up on a P&L. It doesn't, it's an item that doesn't show up on a financial statement. I mean, unless you're really looking and had just amazing bookkeepers, but because there's so many things to look at, but not to scare anybody. I think look, my whole thing is I just don't want people to gloss over this and just make sure that they're prepared for this because the
In reference,
acquisition piece.
Jazz, oh, I'm just going to say to what you said about balance sheets. If you requested a balance sheet, the utility deposit would show up.
So this is actually where it's best to request everything at some point in time. Look, again, I know the reality is brokers are being very hesitant, and they have been for the last 3, 4 years of sending anything out, and they want all this stuff. And it's totally okay to go through the motions just to know. But at some point in time, I would never make a multi-million-dollar purchase without getting verifications of this at some point within the process. Your utilities, your balance sheets, even if you're not going to do creative structure, it's still very important for this exact reason.
In your experience, when you're talking about profit and loss statements, you verify numbers and whatnot. If you see a lot of round numbers on there, what do you think about that?
Look, yellow flag. I don't know, yellow to red flag, right? So it's just my question list that's gonna go to the broker back afterwards starts getting longer and longer. So you got to figure what is this?
That's why I said, like, if you start looking over the memorandum, you don't get very deep. And like you said, you take it at face value. But if you see a bunch of round numbers, be pessimistic. That's not the true thing. That's an estimate.
Yes, your rental income didn't just magically stop at $1 million and your expenses 750.
We have a question, Alex. What question do you have?
Hi, everyone. Thank you. Hi, Darina. Hi,
Alex.
everyone. Hey, what's up, Tyler? What's up, everyone? Question. So my biggest fear, and I'm trying to understand, I have all the gurus in one meeting here, so I appreciate it. Like septic, well, water treatment, flood zone. Should I be afraid of those things or not? Because for me, this cloud of $500,000 to replace a huge septic tank that leaked, and there is an environmental issue, and my park is shut down for the next 6 months. Is it something I should be looking into or not?
It's a loaded question.
I know. That's why I'm asking it.
And Mychele can answer too, and I'm sure Jazz has some input. Should you be aware of it? Yes, that's an on-site physical inspection. Have I bought stuff in the past without open lines? Yeah. Have I had problems? But we physically looked at the stuff, and I think being there on site, looking at the infrastructure before you buy it, regardless if you have the inspection. If you schedule an inspection, you need to be there. You need to have somebody you trust there to actually see what's done, because that's going to be some of your most expensive problems.
Correct, but on the other hand, you cannot jump into the tank, into the septic, and see how bad is it, and no one will give you warranty, or will say, hey, the tank is good. They can say, hey, it's good for another 2 years. It can fail in a month. How do you take those risks? And those risks are in hundreds of thousands of dollars. Yes, in case of replacement or contamination, you don't know how much you need to dig. It can be only digging. It can take $200,000-$300,000 digging a couple. I don't know. You understand? So I'm just trying to. Or you say, hey, it's gonna happen. You understand? I have enough funds that I can cover it, which is also okay answering. I understand that, but the question, yeah.
Well, we
Mychele,
ask questions. So we always ask questions. When was it last serviced? When was it last replaced? What services have you done on it? Do you have receipts for all of that? I know Jazz was just working on one that we're getting ready to close in the next month or so, and it did have an environmental issue. And so we actually separated that parcel out and worked on that one as a separate transaction so that the rest of the park wasn't affected by that one transaction. So there are ways around it, but when it comes to the septic and things like that, you can have them inspected, you can have them looked at. Make sure that your inspector is somebody you trust or somebody that's working for you and not for the park itself. You should be there. It's always good to be there on hand, but we always ask questions. One of our favorite questions to always ask is, if you had all the money in the world, what would you do first? And we get the craziest answers because it seems to drop their guard and they don't realize what they're saying. But when we asked that question to one park, the first thing he said is, I would upgrade my septic system. And I was like, upgrade your septic system? Why? And he said, because it hasn't been changed in 25 years and it's about to go out and the city's coming after me for it. Well, that changes everything. And apparently it was not just one septic tank. He had 3. So now we're at $700,000 and we were like, yeah, we're probably going to bow out unless you can give us a drastic price drop. So there's different depending on where you're at, we don't deal with a lot of septic tanks. We try to deal more with city sewer. But when we do have to deal with them, we always get them tested. We always have somebody look at them, and then we just ask very pointed questions. We want receipts on what's been done. We want to know the last time things have been serviced. And that stuff is probably more for an RV park specific call, office hours that we do later on today. So that would be for an office hours operator. So if you want to jump onto something like that, that would be great to answer questions that are a little more pointed towards inspections and due diligence on specific parks. But I know somebody had a question on here about underwriting expenses. Jamar.
Thank you.
Jess, how can people connect with you if they need underwriting?
I'm most active on my Instagram. Actually, I think I'll put it back in the chat as well, just so everybody has it. But I'm constantly answering DMs and stuff.
And Mychele, can you send a link or I can share it, I guess, too? The Zoom will every Wednesday, 5:30 p.m. Central Time. Mychele and Rinda, they doing the Zoom, so
How you feeling about the perm thing?
I know everyone wants to talk. I get it. Unless it's a question, don't talk. Here we go. So can you share I shared actually earlier your Instagram, but I will share it now. So I know just you have to go. Any last minute thing that you want to tell?
I was trying to go up in the chat. I saw Jamar had a question. I didn't fully understand it, the hospitality versus real estate expenses. How do you underwrite the expenses? I know once you back out all non-operating items, those items backed out can also be hospitality expenses opposing to real estate expenses. So how do you guys separate and value hospitality versus real estate? I don't know if I'm going to try my best to answer this one and I might be off, but when you're looking at these types of assets that have hospitality, I'm assuming RV parks as well. It's simple. I underwrite the business with the real estate expenses. I underwrite it globally. So I know some people look at the real estate alone as there's a property taxes, property insurance, and whatever. And then here's what the business does. Maybe you have a restaurant and everything. I think it's really important to have an idea of separations between all the moving pieces in these asset classes. But overall, my decision is going to be based off the global. It's going to be based off of okay, what's the sum of all the revenue, all the amenities that we have, plus the expenses, and then look at the bottom, see what's left over, and then start doing my calculations on what type of debt structures we're going to throw at, I guess, the overall property. I'm going to add a little bit to that. It is very important to know what you are buying, though. I have underwritten stuff where most of the revenues are coming from a restaurant and not the RV pads on an RV park. So you're basically, I made a post about this. You're basically buying a restaurant with RV pads around it. You're not buying an RV park with a restaurant on it. So I will say for sure it is important to know everything but a lot of decisions, I think, if I just keep it very simple and short, it should be made on a global scale. Expenses, look at all the real estate income and the business income, and then decide from that point forward. You want to make sure your bottom line is big enough.
Thank you so much. I'm not sure if Jesse, you have question to Jess. I guess you will have to email him or text.
No worries. All right, bye everybody. I gotta jump off to the next meeting, but it was good. Mychele, I'll see
Thank
you
you so
later on
much.
your guys' call too.
Thanks, Jess.
Jesse, did you have a question to Jess?
I think it's really just for any of the experts in the room. I'm a total noob, total rookie, and just had a question about some of the things that you've seen mostly misrepresented by the owners whenever they're giving over all these financial documents. Because I know that the record keeping isn't great. They're going to overestimate certain things and underestimate. What's the biggest thing that you guys see that's really consistent when it comes to underwriting?
Can I answer that? Occupancy rates and what they make and what they're pocketing. So a lot of the times they'll tell us, oh, well, we don't keep track of that. But really during the season, we're fully occupied. We're always busy and I'm pocketing $200,000. So you need to make sure that you put that in your scope. So we're paying for that too. Our thought is you can't get double dip. You don't want to claim it with the IRS. You can't claim it with me. So that one is actually a huge one that we see all the time. Everybody's always trying to inflate their numbers so that we then think, well, then that means, oh, well, I've got to account for this. So your NOI isn't really 200,000, it's 400,000. That's not how it works.
Do you see that more with long-term rental RV parks as opposed to short-term vacation spots? 'Cause
I see it in both.
I feel like with long terms they probably pay with cash a whole lot more, and so they can take that weekly rate or whatever via cash as opposed to the vacationers probably swipe the card to make reservations.
No, actually, I see it in both. And the reason why is because RV park, vacation parks, even there, they have literally gone from being cash only to just now getting on credit card systems. So a lot of them, and they still to this day work on a cash basis.
Do you see it also in mobile home parks? I know Tyler does a lot of mobile home parks. I don't know if you see it the same thing that's misrepresented or something different for you.
Well, very similarly, in the same thing she said, but it applies in different ways. So, occupancy and revenue, yes, are the both things, both from the cash that gets pocketed or not reported. It's always different, and then the broker wants to sell you on what the market rates are, not what's
Right. Yeah.
actually getting rented at now, and then what's getting the rent rates now may not necessarily be what they show on their financials or in their actual bank statements that's being collected because just that they're pocketing some of it. And then as far as the occupancy goes, I see that misrepresented a lot. The broker could have it fully occupied, and maybe they are. If it's a park-owned house, it could just be vacant, and it could need renovation, and you wouldn't know that until you got into due diligence and actually saw it there in the park. So going and physically laying your eyes on the houses, making sure that there are actually people in them, and then when you get farther into it, talking with those residents. And I've had that uncover a sewage problem before because the resident, and this is the story, so I didn't do this. And right after I took over, I talked to everybody, but there was a few residents. And if I would have talked to this resident, I would have known that she had had a problem with her septic tank for a year after it had been sold. And I'd actually questioned the guy about this tank, and he had it pumped for me, but it didn't fix the problem that it wasn't draining. So it's talking to the residents can uncover things that you won't see on paper. No problem.
Yes. And if you guys have questions, you can just raise your hand. We will talk today also about operators and deals, and also PML and how actually you can prevent deals from happening. Sometimes the best deal is the one that you didn't do. And especially me as an ally, we do TC work. There's so many deals, especially PML, that people came them to help to do the TC work, and you see that it's just a scam or bad deal and there's no exit, and it's kind of a trap. So, Ala, do you want to go first? Do you want me to go first?
Either one. I'm fine with you going first. It's fine with me. Or I can go first.
You can go first, and then I have a little presentation that I can go over.
So I've definitely been around a lot of deals in the past 4 years that I've been a TC, and I've uncovered a lot of the what you don't know, right? Which I think is something that a lot of newer lenders or even seasoned lenders sometimes fall into those traps. And it's just amazing to me. And I think a lot of it can really be uncovered if you're doing your due diligence properly, right? I did a consult last week, and they were looking to, the borrower was going to borrow $60,000, and it was for some liquor store license, and they were going to collateralize it against a piece of land in Oklahoma, which was ready to develop. So the lender wasn't sure if this was going to be a good deal or not, came to me, and I was like, so let's do a screen share. Let's look into this deal a little bit. So number one, you definitely want to know who your borrower is. I think it's important that, because a lot of the times people in this community, we think we know one another, but then there's a lot to be uncovered. So knowing, Jazz said, a good predictor of the future is going to be the past. So knowing what someone has or what kind of track record someone has in their past business deals, or even just with their financials in general, is a pretty good indicator of how they will treat your money, right? So another thing is to make sure that you're looking at these deals through a magnifying glass, right? So we looked at it, we found out that yes, this was the owner of the property. Great, that's number one. Number two was, okay, so let's look at the GIS map and let's see where this land is and what it really looks like. So I'm looking at the GIS map, and this is so strange because I see that he owns the land, but I don't see the land on the GIS map. So I go and I zoom in, really zoom in, and find out that the tract of land that he was looking to collateralize was a strip of land that was about 12 feet wide by 100 feet long, and it was surrounded by houses on either side, which you really can't do anything with. So if we hadn't done that due diligence, he would have probably lost the $60,000. And if he foreclosed on that land, he wouldn't be able to do anything with it. So I think looking at the property that's being collateralized, and that was just land. When it comes to houses, that's a whole different thing. You want to look at what kind of debt does it have currently on it? What is as is value of the property? Not looking at an appraisal that's a subject to appraisal, really reading the fine print and seeing what kind of appraisal is this? Because if you're lending on ARV, that means that you're going to have to dump money into the property in order to get it to the standard where it could sell for that amount. So if you had to sell a property tomorrow, what would it be worth? I think that having a promissory note and a mortgage or a deed of trust and personal guarantee and all of those things are going to help you. But the fact of the matter is that if there is no equity in the property, those documents won't do anything for you, because essentially you're going to be foreclosing on a property that has no equity to pay you back. So really getting in and looking in these deals and looking at all of the details about the deal. When somebody says, oh, I need this money for tomorrow. Well, you need a title search. That's not going to happen instantaneously. You need to make sure that you're getting all of your insurance and insurance on the property, like being listed on the hazard insurance. There's so many things that have to be done in order to do a good lend on a deal that it's not something that you can rush. And I would definitely say that if someone is coming to you saying you have to have this money tomorrow, it's automatically going to be a no for me, right? So there's definitely time that needs to be spent doing your due diligence. And I think part of it is probably people get into bad deals because they're feeling the pressure, right, from the borrower. This has to happen today. So I don't know if we're just talking about RV parks, but I think this goes in general, right? Just any
It will be in
lens that you're
general, so it's really good. And I know we have Damien. I need to find him. Anything else that you want to share?
No, not really.
I know we have a lot to share. Like
There's just
we,
so much. This is just skimming the surface, really.
That's
Yeah.
funny. That's a good nugget. It's kind of that even applies to like, if we're renting houses to people, and they come and they're like, "Oh, I have the money today. I need to move into today." Red flag. You may have thought you were helping your chances that you have the money today, but no, you didn't.
Right.
Yes, and we have Damien. Damien is a private money lender. He is also top tier TC. He does lending for, he will tell how many years. So he can share about that.
I'm usually the borrower though, but I've been lending for 6 years. I just did my first IRA loan. One of my favorite things is that people do when they're pitching a deal is that they'll say, "Hey, you're going to have 65% of ARV right off the bat, right?" And they're doing a flip. But they don't tell you that that 65% is coming from the ARV, not the as is value, right? And so sometimes when you're lending on it, if they bought what we call a grandma house in the industry, right? Where everything is functional, but it hasn't been updated since the 70s, right? So everything's got to come out. So you might have had an as is value for 200 grand, but once they do the demo, that might take it down to 75 grand. And what's been happening too is that people have been walking off the job even after demos and leaving the whole thing demoed. And now your asset that you thought you had 65% loan to value, 300,000 or whatever, now is a $70,000 asset, right? So that's one thing. And you're lending in second position, that's pretty much all goes to the first at that point. But so I've been in real estate for 20 years, private money lending for 6 years, but I'm more of a professional borrower than I am a professional lender. So I get to be on both sides of the stick. So
Anyone else wants to share before I share a quick presentation? And we can guys interrupt as well anytime. So 1 second.
I think one thing, sorry, Darina, one thing that I wanted to mention that I forgot was when you're lending money to someone, you don't want to lend, especially on rehabs, you don't want to give them one big chunk of money and then hope and pray that they're going to do what they need to do with that, right? But then I think another thing also is that sometimes it's not a rehab, sometimes it's for an acquisition but really making sure that there's full visibility into how this money is being used and that it's actually going to the projects that you intended to lend on. Because I've seen people lend on deals and the borrowers, I'm going to use this money for, I don't know, for rehab, for acquisition, whatever. And then we look at the settlement statement, and the money was used to refinance someone else out, but it was never questioned because no one knew what they were looking for. So really being vigilant about being a good steward of your money and making sure that you understand exactly what's being done with it.
Love it. I know you're not Varsha, but I guess
I'm
you use
Kinel.
it.
I'm Varsha's husband. She was using the Zoom. So you said a very good thing. Again, I'm a lender and I do first position lending. A lot of times I also lend for rehabs also. So that is a standard rule I apply because let's say if the people are just buying the house, as even Damien said, right? They are 70% of ARV, but when you're giving the money for the rehab also, let's assume if they do not do rehab and just run with the show, then what do you do? So what I normally do with the house, what is the collateral? Because if you want money for the rehab, I also need a collateral because if you go without doing rehab, how can I get the money back? So the money should be fully covered. That is point one. Second point, if you are giving money for the rehab, you should be ensuring you do not give the whole chunk. You get the whole plan. What is the plan for their work? Get the breakup of the expense of each of the work, and then give them the money part by part and ask them once they complete the work share all the photos of those work so you have completed that work for which you are giving them the money.
Love it. So, as you guys know, we're trying to share 100 years of experience in 1 hour. So that it's hard to go through everything. We will go high level. Hi, Varsha. He uses your account. Just so you. Do you want to tell something?
No,
No.
when we take property,
No, that's what I told. Yes.
we also see there's equity. I think which Ella covered. We see equity, enough equity on the collateral.
Yes, when you lend money, you need to lend on as is property, not for the
Yes.
future value. And that comes, I know sometimes you have to borrow more to make that value, but still. Oh, and we will go through some details in a presentation.
Can I
Okay,
add something very quick
sure.
so even if you get the photos, it doesn't mean the photos are from the project you invested in. You need to have boots on the ground that can actually go and verify someone external that can verify this, because I know there is some Ponzi scheme going on in the community and people were sending in random photos from different projects. So just be aware of this, guys.
There's also an
And
app for that too. Have you seen the new app that the hot money lenders use where they have the GPS coordinates in there? But then again, there's also apps that will fake your GPS coordinates too. Do you know that too?
Yeah, you can fake everything today, but
I know.
that's why boots on the ground is and someone you trust to send to take some photos. That's the best way.
That's one of the reasons I only lend to areas that I can actually drive to and that people I've known for 3 to 5 years that I have no problem calling their brother, knocking on their door just to ask a simple question if I can't reach them and it wouldn't be too weird or anything. So
yeah, 100%.
Yeah.
We should connect, Damien. We're here in Jersey. We should connect.
Oh, absolutely, man.
So the easiest way to lose money is to lend to someone your hard worked money. And we will go quickly through mindset of PML, what question to ask, and through the operators and uncomfortable questions you have to discuss before you insert yourself into a deal as a lender, as a partner, etc. So as a PML, private money lender, you are the bank. And there's a couple priorities. Number one priority is return of capital. We all want to make money, but it's also great if you get back, at least your capital. So you want to make sure that no matter what happens, you can get money back at risk principle. Then you want return on capital. This is when you actually get profit from it, right? And the power of no. PMLs, I'm pretty sure Varsha can prove that a lot of times they just have to say no. As Ella mentioned, there should be no pressure for you to fund. If there's pressure, something may be wrong, because when we have deals, we talk upfront with our lenders, we communicate, there should be no rush. And their lack of preparation is not your urgency. You should not be in a rush because someone didn't plan upfront. Critical question when you vet in a partner or borrower, I'm going extra I know some people say, oh, if you do that, you will close less deals. But for me, I better close less deals than lose money or go with bad investment. You always need to know what is your exact exit strategy and what if that strategy will not work. You have to have multiple exit strategies. You have to know if that person have done this exit before because they can tell you, hey, this is a plan, but they never done it before, and they have to be transparent about that. You can ask what issues have they overcame in the past, and that can be issue with projects, issue with different partnerships. Just have an honest conversation. Hey, this is what happened. This is how I overcame it. And then, of course, sometimes people ask for money and they don't have nothing under contract. And we will talk more about that. So another interesting thing is background check. I know we all love creative finance. With creative transaction, you don't have to know credit score. You don't need to show tax return, but you also don't need to show background. But it really helps to know background. And if you go and decide to do some partnership and buy especially bigger assets, we're not talking about single family homes. Even with single family home, you'd want to do background check and all the checks that you can. But when you go and buy big assets and it can have multiple businesses, like Mychele, sometimes they buy and it has 12 businesses in it. That's huge. You want to know who you're working with. And having background check, if you don't have nothing to hide, I don't think someone will be against it. Run it all day long. I have nothing to hide, so I'm not afraid to talk about that, to offer it. But if someone is really offended by that and they will tell you, so you don't trust me, that can be a first red flag for you. And then legal history. We live in America. It's okay to be in a lawsuit, I guess so, because everyone can sue you for anything. But you need to ask, do they have actually pending lawsuits? Some criminal records? Can that affect you in the future? Imagine you buy an asset and that person in a lawsuit now, that may affect you in the future. What if they plan to file a bankruptcy and you are a partner with them, maybe in one LLC? So you have to talk everything up front, and there's a list of questions I can also share. And also credit score. I know I came to US, I bought my first property without using credit score because I didn't have it. I bought some too. But now, a couple years later, I do have my credit score. Do you think it's really hard for me to share with my partner my credit score? No. But if someone is offended, why? Because I feel like, yes, we use creative finance because we write off a lot. We don't want to show our actual income because we have a lot of business expenses. But our credit score actually shows, can we make payments in time? Are we good people? Can we just pay our bills in time or no? If not, that tells you something. And also, it limits your exit strategy if something goes wrong. I believe that we have to be bankable. If you're not bankable, you may want to change something or work toward a better future. And then, of course, writing the deal, underwriting first, second position. Second position is very risky. And then you would want to have someone, especially if you land on bigger assets or you partner on bigger assets, you want to have true underwriting, not just napkin underwriting. Hey, it's gonna work. We got it. But just true underwriting. You want to review documents yourself. Even as PML, you still want to go through documents. As it was mentioned, ARV and loan to value. You need to know the difference, and you need to know how much money you're giving and borrower skin in the game. When I work with PMLs, most of the time, the first time we work together, I always put some money down. They will finance 90% and I will finance 10 down, and then renovation. I do a lot of flips, but it's good to have borrower skin in the game to make sure they actually have some money in a deal. However you invest as PMP, PML, and then I will send you guys all the checklists. You can have this presentation. You can have all the checklists. It's PML must-haves. As many of us know that there's now a group of people that invested 50 millions, but the borrower only bought assets for 20 millions. I don't know all the details, but there's a sort of millions gap that maybe, right, in that kind of investment. And many of those mortgages were not even recorded against properties. So you need to have promissory note. And again, we're going just quickly through that. Promissory note, mortgage, lender's title policy, insurance endorsement, you have to be added to insurance. Personal guarantee, that can help or not help depending on the borrower's structure. But I know that people now asking for money and only offer promissory note and personal guarantee. That is not okay. Personal guarantee will not help you if their assets are hidden in trust. So you don't want to trust anyone, even your grandma, if they just offer you a promissory note. Second position, I think, I don't know. I don't like when people land on second position unless they really know people, they trust them. You have to verify first position mortgage. I would suggest to get authorization to release information or limited power of attorney. So if something happens with the borrower, at least you can talk to the first position. Because if you don't have any documents, the first position lender will not talk to you, even if they have to foreclose. If the borrower stops responding, you are in a second position, you will lose money. And then cross collateral, of course. Sometimes I do cross collateral for my PMLs too. Again, sometimes it's good to have monthly payments, monitor project progress. I'm with Damien. I love being local to projects, and it just helps to actually be able to visit them in person. And stay involved. Passing lender can lose money faster. So I suggest to do background check, credit check, reputation check. This is huge. I know our community is big and the world is big, but also it's small. If someone is doing bad, since it really spread fast, but no matter what you hear or see, you do your own independent search. Because someone can have good reputation, but you never know about cracks that are happening. So you just want to do your own research. Independent underwriting, as Jess mentioned, you want your underwriter to, because you cannot just trust, especially if you invest outside in different states. And then position verification, your note and mortgage has to include what position you're in, because there may be surprises if you didn't mention position. So our suggestion is to trust but verify. If someone is, if we don't want to hide something, it's not hard for us to share everything. Security in documents and experience matters, but we need to have track record. And if you don't verify, then you can only blame yourself. That's my presentation. So I feel like we all have so much experience and so many deals that happened easily. We could easily prevent it, just like Ella did, right? The borrower paid consultation. Guess what? They are happy because they saved so much money.
I have something to add too. So when you were going over the what you have in your collateral file too, I always have assignment of rents. Sometimes I have assignment of leases in there and confession of judgment. Confession of judgment though doesn't work in every state. And in some states it's actually illegal to have that in there. So you can get your note thrown out. So it's very state specific. Another thing too that I never even thought about probably until like 2 years ago was servicing, right? And then just as a TC working and onboarding people with servicing all the time and getting the note rejected from the servicer. Wow, there's a lot of value in having the servicer there because they're going to be your last check once you have your note drafted, and they're going to say, hey, you're not within usury, or your late fee is too much, your default interest rate. And then I think you can add that to the list too, having a default interest rate. And the servicer will kick it back to you to stay within legal compliance. And they also, servicers, usually they have departments that will handle loss mitigation. They'll send out the notices, the demand letters on a timely manner per state law. And usually some of them have foreclosure services. And if not, they're usually partnered with attorneys and they can just hand you over one. And a foreclosure attorney is definitely different than just a regular real estate attorney who represents buyers and sellers in a deal. Totally different mindset and the way they look at notes and stuff like that. Actually, those are the guys that you probably would want drafting your notes if you go into a new state you're unfamiliar with too. One other tip that I just learned this. So I was on a Zoom and a guy goes like this. So I think it was Arkansas, and they're like, Arkansas is a non-judicial foreclosure state. He goes, I want a deficiency judgment, so I'm going to go through a judicial foreclosure. So a lot of people don't know this too, is non-judicial states, you can actually do a judicial foreclosure. But most people are like, why would I ever do a judicial foreclosure? But in the case that you need that deficiency judgment, right, that going through the auction, the house is not going to get you the amount that you owe. You can go through a judicial foreclosure and get the deficiency judgment that way. So just so extra tips. That's it.
That's great. And then people asking about app that I use for background check. So I use just quick background check with Forward. This is app for licensed agent. But honestly, if you're going to buy big asset, you may want just to do full background check. Why not? Just have it. I don't see issue. It's $45, $55 to run all the issues. Even if someone was evicted, guess what? Do you want to know it? Why? So I feel like, again, if someone has nothing to hide, they will share and they will not be offended to spend $55 to share background check. It's not about, oh, you don't trust me. It's about we getting into big asset and we want to know, could that person actually handle their life before meeting you and going into that business together?
So I have to say that I do large assets. So all I do are RV resorts and RV parks. And we deal with a lot of family offices. We deal with a lot of big money lenders. I think we have one person invest in our fund for over $8 million. We have a lot of money that come in and out of our operations daily. When somebody that asks me for something like a background check, a credit check, proof of assets, can they call my management? Can they meet my operators? Can they come stay on my parks? Can they work in my parks to see how they operate? I have zero hesitancy on making sure that that happens because I want them to feel fully comfortable with what they're giving me and understanding exactly what we are doing in our operation because I want to be completely transparent. And I feel that as an operator, we should all be working on that level. Everybody should be completely open with what they're doing. We have our books are opened all the time to our family offices, especially because we work with a fund and we're completely secured by the SEC and we're monitored by the SEC. We have to be completely transparent about what all transactions are happening and everything that's going on in our business. And I feel like it is the only way to do business with people in general. There should be zero hesitancy and zero shadiness to any transaction that you're doing.
And things can go wrong, right? We're not working from 9 to 5 on a stable job. We're working with big assets and small assets. And if that goes wrong, that can happen to every one of us. It's about communication and being transparent and just talking it through.
And I'm going to tell you, it's not that everything has gone rosy. We have had hiccups that have happened. And the first thing we do is we contact all of our investors and say, hey, just so you know, this is what's going on. This is how we're rectifying it. How can we make you feel more comfortable with what's happening? And it's happened. It doesn't happen a lot, but it does happen. We also put out information monthly on everything that is going on so that all of our investors are fully aware of what is happening in all the parks, how things are improving, what did break, what needs to be fixed. I personally think that over communication is always the best way to be. And we are always in contact with our investors. If they call, we answer the phone. We never don't answer the phone or we text them and say, hey, we're dealing with this. Let us call you right back. I can say that I feel like we are as open as we can possibly be. And I feel I would never want to do anything with somebody who was like, no, I can't answer that, or gets angry when asked a question. Because I've heard of that too, where people have asked questions. Can you verify this? Well, why do I need to show that to you right now? Well, because you're partners.
And you may not share it just because someone is asking you from Facebook, hey, prove me that you own asset. But if you go into partnership, that's when you share, guys. So don't feel obligated to share everything that you own with everyone.
That is correct. But I do say that that is one thing that I'm very proud of in our business is that we are very open with everything that we're doing all the time. And so I've just found it very interesting, especially as the community is growing, to hear of people asking for your money and then getting angry when you're asking for verification.
So you have to do your own research, be mindful, and then if you make a decision to invest money or to partner with someone, blame yourself, please. Just take a note, make it the first note in your phone, blame yourself, not your husband or spouse, or your mentor, because no one can be there to hold a candle for you when you're making those stupid decisions.
When you make the decision to take someone else's money, you've taken on a new responsibility, which is like Mychele said, you're now obligated to provide things and answers that you don't have to do, in my opinion, to people that don't have any involvement with you. But that's a different kind of responsibility, and I feel an obligation that if I'm going to receive your money, I should answer any question you have.
Right. If you want someone's money, you should be willing to bend over backwards to give them anything and everything that they're asking for to feel secure in making that investment with you. Because if you can't, then people shouldn't have things to hide when you're going into business with someone. That's where it's like you got to peel back the curtain and see what operations is really, what do you really own, and get proof of that, right? Because I can say I own Taj Mahal. That doesn't mean it's true, right? So you got to be
very
why is
convenient
this
that it's
not
in another country.
why is this not being posted out in a public setting where people can have access to this? Because when you're coming into here, Tyler is not someone that you would bump into. He's obviously a very responsible person who obviously values people's money. And Darina, we've already had several conversations. I know you're legit. And Ella, you're irreplaceable. But
Thanks,
so
Mychele.
my point is all the fire you guys are dropping in here, you guys know some of the hell I've been through. And I am talking to people on a daily basis. One guy ended up in the hospital from the crap that's going on. I've been talking to people there. This real estate's all scam. There is daily conversations that I'm having with so many who have no access or no easy access to the fire that you guys are dropping in this call. And this stuff should be the stuff that's being presented on this stuff should be the stuff that's being presented on real estate investors, scams, and questionable practices so people know what to look for. This stuff should be the stuff that people have access to. I did not hear Tyler swear one time, but at the same time, I heard him drop a lot of knowledge and serious thought, as well as Ella and Darina and Damien. I've heard the same thing from you guys. I've been sitting here listening to you going, where were they and why were they not in front of everyone teaching in a way where everybody can hear what they're saying? I've even had the opportunity to tell someone not to throw $500,000 into a fire because somebody who was coming after him was illegit. My point is, you guys have truth, you have wisdom, you have knowledge. I don't know if you have some insecurities or what, but you guys need to be loud and proud, and you need to get out and start shouting it from the rooftops, because the people out there that are PMLs have lost their footing.
I appreciate that.
Thank you, Mychele.
Yeah, I'm sorry that you went through that, and I wish we met before. And it's so interesting because Mychele, she is from Minnesota, and I never seen her. We never met. And
That just shows you how big the community is. Like you said, you just
But
people.
I think a part of it is too that just people don't look, there's only 50 people in here. You would think that more people would want to protect their money. Why aren't they in here? But maybe it's a marketing thing. Maybe we just need to have more of these. I know that I've started having a Zoom on Fridays and I talk about very similar stuff. And I think we just need to do, for those of us who are here on the panel, maybe use that to our advantage and talk about this stuff more in our Zooms as well. And just really keep on hammering it home. Eventually, more and more people are going to have the wherewithal and the knowledge to know what to look for when they're looking to lend, right? I try my best to post and stuff wherever I can so that people hopefully are getting eyes on it and are second guessing when people are coming to them with these really shifty kind of deals and even just shifty people. We can't prevent that. It's unfortunate that they're here, but the least we can do is really protect ourselves the best way we know how, and that's doing our own due diligence, right?
I don't know that we can't prevent it. I think that it's being stopped because honestly, there was someone that posted out on the regular site who had scammed me. And I was like, heck no, you are not going this way. And I got out there and said something and I got shut down. And I was like, that's not cool because whoever's coming behind me is getting slammed. And I didn't want that for them. I didn't want it for myself, sure. But you learn then you don't want it for somebody else.
Right.
And so I don't like the fact that it's allowed to take place. And it is allowed to take place.
I think, can I
be loud.
interject?
So I think that educating people on how to protect themselves is the next best thing that we can do.
Yeah, this Zoom specifically was also created to help prevent issues because people come to us after something happens. And I wish we met you before we could prevent it. We could stop you from investing in bad projects, in bad operators. As we went through many transactions, it's just easier for us to spot that there's something wrong, just easier.
I agree. Yeah. I just think it was really neat what Dorian posted. Dorian Levy posted. And I think it's just important for you guys to post. Get your voice, single voice.
And the problem is that when somebody puts out a post who's not directly affected, like Ella or myself, and everybody jumps in and they're like, that didn't happen, or you don't know what you're talking about, and this or that, everybody else gets quieter who it did affect. And then nothing gets solved because then it's like, I don't want to get attacked either. Well, if all of us are speaking up at once, it's harder for that small group of people to be the loudest group talking.
And I think Ty has been helpful. I don't know who all knows Ty, but I think Ty has been really helpful at helping people get a voice. And so I do think that there are people that like Ella and Damien and Ty and stuff that are out there with an ability to connect to. I didn't know Tyler, so I didn't want to necessarily send anyone to Tyler, nothing against you. Or Alex, I don't know you. Mychele, I thought you were working with Dora, and I don't even know. So I didn't necessarily know who the other faces were that were safe to send people to. And I'm not going to send everyone to Darina. I know she's busy, but just kind of, I think if each state had maybe a few representations of safe faces that people could go to if they had concerns. I build care packages for veterans that they can get the care package and get to safety out on the field in the military. So if there was a safe space for lenders to go talk to different people in each state, then it would be several people handling it, not just Ella and Damien or whoever, but it would be a group of people, which would make it easier. And hopefully there wouldn't be that need. Be prepared and then you don't have the need. But if there could be something in place where people knew who was safe to go to.
Underwriter, I would say that's the first place to go because even if the operator is good, checking the deal and checking the operator, it will be almost impossible to put some people in charge and have those safe people because even Caroline said, I love you guys, but she gets so many messages about scam that it's just too much.
Me too. Oh, I want to say one thing. I think everybody here should go on a call with Call the Underwriter. Darina, to your point, right? If you guys aren't familiar, Call the Underwriter, he's basically underwrites private money loans and more so around the seller finance space to get the borrowers Dodd-Frank compliant. But he also does underwriting for investor loans as well, too. But if you go on, he does a free Zoom every Thursday, which is tomorrow at noon Eastern, and just hear what he does. And you can actually see what he does to underwrite a borrower. So you could just sit on his meeting and take that, or potentially you could use him as your underwriter. So his name is Dan Deppen. Dan Deppen, ironically, is a sub-2 student. He joined 6 months ago, but he's not really active in the community, and I've known him way before that. But that's a good resource. And I have the link that's in the scammer group, where if you scroll down, you'll see it's every Thursday at noon. So definitely throw that in your calendar, either for tomorrow or upcoming, because you'll actually get a lot of good nuggets out of that.
Love it. Thank you.
Hey, Darina, I wanted to add something here. Us people that have gone through some little troubles here with some loans, I think it's important, right, for us to share our story in a positive way. You can make that post in the Facebook group. I made a post in the Gator group and in Sub 2 group, and it did not get taken down. It's because the way I worded it, right? I didn't come out being negative. I didn't come out blaming the community, or I didn't come out blaming the borrower. I came out taking responsibility for what I did not know, right? So how do we educate others? How do we educate newer members? Is by us sharing our small story that we went through, right? In a positive spin. And if you're mad about the situation, use ChatGPT. Tell it, hey, help me word this in a positive way so others can learn. Use that, right? Use the platform that we have. Not without, not we don't have to point anybody out, but just to at least educate others and say, hey, if I would have learned something, I would have checked this, or I would have asked somebody else to underwrite it for me, or maybe I missed this, right? Please do that, right? Help spread the word in the community. And if you spin it in a positive way, it's not going to get taken down. More people are going to know about it. More people are going to understand the importance of it. So that's what I wanted to share, because I did share that in the post. A lot of people gave positive feedback saying, oh, thanks for sharing this, right? Sorry you went through this. So just don't be shy, or don't feel like that you're not a solid investor, right? Trust yourself. You are awesome. Just share your story, and others are going to be able to get tons of value from it. So thanks, Darina, Ella, Mychele, Damien.
Thank you for that suggestion. I think I need to also share a positive story how I lost 100,000 in the process. I bought the bad deal, sub 2. But again, I trusted people that I should. Now I know what I know, right? But back then, you will help me, you will educate me, sure. But they were wholesalers. How will they educate me, the buyer? If they educate me enough, I would cancel the deal. So that's why you have to have your own people representing you.
Right, especially your own TC. I can't tell you how many people I've seen who were lending money and were actually using the borrower's TC. And I use this example all the time. It's like going to court and asking the opposing counsel to represent you. You just don't do it. Get your own TC. And I know that Darina, I offer consultations, and I think some lenders are like, well, I don't want to spend money on that. But I think it's very educational to sit down with someone who knows what to look for and I'm hearing a lot of feedback.
Second.
I think it's very educational to sit down with someone who knows what to look for. So that way, the next time someone presents a deal to you, you can then go ahead and be like, oh, well, I know that this is what I'm supposed to look for. And you just get further and further along until you can vet your own deals. But I want to be mindful of our time too. And I know Dennis has had his hand up for a little while.
No, actually, I just wanted to add just a point as a new person to the community. I mean, 6, 7 months in. I've obviously seen a lot of posts. I follow Ella and Mychele and Darina, and thank you for sharing all your stories, because they're always very helpful and enlightening sometimes. It's just, to your point, Ella, before you said like, having these Zooms and only 50 people here, there should be 1,000, right? To listen to this. And it is a marketing thing. From a new person perspective, I tend to, at least based on my experience and how I try to protect myself, is you get to know when you're in the community who the top operators are and who the people that are doing things authentically are. And I try to follow those people and stay close to those circles and learn from those people, because again, it's a 18,000 people in the sub 2 and Gator, it's almost a 30,000 people community. There's no way you're gonna get to know everybody. There's no way you're gonna get to make all those connections, but it is possible to find out who are the people that are doing bigger stuff. And I think because a lot of people I find they skip. We talked about the safety badge and all that stuff. I find a lot of people join the community and they don't even log into the vault once. They're just already in the Facebook group, and all they're doing is just connecting with the first people they connect with, and then they take it from there. At least that's from my experience from talking to people. And I have yet to connect with a person recently that said I did the safety badge, for example, in the last month that I joined.
Right.
It's there for everybody to learn,
It's
right?
there. But I just think we're actually working on doing, so I'm going to be hosting Safety 2.0, right? Because I think it's long overdue, and I think there's a lot of topics that we need to touch on, but it's almost like hidden away somewhere, right? There's not many. I just think that everybody's so anxious and so excited to make money, right? And I will say, if the deal looks too good to be true, more often than not, it is. And as I was saying earlier, there are more bad deals than good deals out there. So you really have to be vigilant about where you're going to be investing your money and just try and learn as much as possible about how do I do my due diligence, right? So those are things that I'll be talking about tomorrow too. And I know Darina talks about that as well. But there are ways to learn about that, even if it's not in the vault. You can always come to one of us and ask us. The resources are here, and we're trying to let you guys know that and make you aware of that.
But when you're coming in excited and you're coming in new and you're coming in unaware and you're coming in with blindfolds on and with earmuffs on and you're trying to figure out what you're doing, little hints are not heard.
No, and I totally understand that. I get that because I personally have suggested that we have a list of people that have done something. And I think I was talking to, I might have been talking to Ella or I might have been talking to somebody else this morning. But I was like, it would be nice if we were allowed to have some kind of a list where I'm not saying you can't change your ways or that something doesn't go wrong. But maybe we had a list of sometimes I did a deal and something went wrong. And I had to have a recourse action. I had to refund, or I had to be a part of something, or I'm in a lawsuit. If there was something that could just say, hey, just so you, these are the things that this person's going through, you might want to ask extra questions or do extra due diligence. Does that make sense? If there was some kind of a thing where we could do that, it would be so much easier to be aware as opposed to looking for these tiny little red flags that was popping up. Where if I'm truly open with everything that I'm doing, if I have somebody who's coming at me saying, you did this or you lost this, which happens in investments. I'm not saying it does. But if I had multiple of those, where there's smoke, there's usually fire.
Right. I agree with that. And I think you're very on with everything you're saying. And I think the idea of having positive JV, if you maybe had a deal that didn't work out the way you were supposed to, then have a positive JV with someone on the next project so that it is successful. So you feel good and they feel good and everybody feels good because you had someone more advanced than yourself who could help you. It's not really about such and such Bauer stinks and they should go to hell. It's literally about such and such failed or failed miserably or failed horrifically or whatever. Those people need help before they get to horrific, right? They need help before they get to bad. They need help before. So it's about being proactive. I absolutely agree, Mychele. And I think that's a really good way of putting it.
Another thing to your point too, I think maybe people should be encouraged to come out and tell their whatever situation they're going through that might lead to a negative path. I'll share something personally. So I've been software engineering manager for 25 years, right? And I've always had a job. I had my own consulting company for a little while, but I had a full-time job up until June 2025. I got laid off. And so I'm like, this is weird. They don't want me. Last time I got laid off was over 20 years ago. So you got like, hey, this isn't real. But then a couple days later, I'm making phone calls to my private money lenders and I'm telling them, hey, by the way, I got laid off. And this is probably awesome for you because now I'm a full-time real estate investor because you keep telling me to do that. But I just want to let you know that my financial situation has changed and it could change and the way we work might change, right? But that was like what, over 6 months ago now, and I've had no issues with paying my private money lenders or anything. In fact, I've bought even more properties than I have ever being out of work. But the point is that I told them, hey, this is what's going on before anything happened. And I remember feeling that sense of relief that this, all of them were like, oh, thanks for telling me. And if you need anything, even one of them till this day is always like, hey man, how you doing? Especially when they heard I just paid up for a water replacement. There was a lead line to a copper line, 7 grand. And two of my private money lenders, one of them forced me to take $7,000 from them. He goes, no, just take it. I want to make sure you're okay. He forced me. And then I had another one that recently kept checking on me. Hey man, are you okay? You okay for this month? I know you took a big hit. And I told them about that too. And wow, I just got hit by two 7 grand projects in the same house. I had the main stack go anyway. But what I'm trying to say is like, it's okay. We all go through bad times. And if you tell your private money lenders, hey, I'm going through this bad situation, this change. Maybe you can get a loan modification. Your loan might not be due for 3 months. Maybe you can modify it out to a year or reduce the payments. And this way, the conversation is so much easier if you get in front of it than if you're defaulting.
I think that's a really good point. And I think that one of the other things that I need to say, because Michele's comment, and because I think you guys honestly need to know this, I don't think you guys are in the shoes, most likely, unless Dennis find himself accidentally in the shoes. But if you're a bad borrower, you are going on a list. There is a list that you are going on, and you will not have people lending to you in the field of the National Association of Lender Association or whatever. They literally have a list. There are lists being made. So if you think you can F somebody over, best wishes, because it's going to come back and bite you in the butt. And there are literally intentional people out there that I've went to, unfortunately, that are literally doing this on purpose. And so it will bite them in the butt. But I will continue to go on. But I'm just saying it's better not to do that to start with. And obviously no one on this call would do that, or they wouldn't be here at this call. So anyways, I just thought I'd let you know.
Well, I think that Damien was saying, though, I think the communication thing is a huge part of that, because we had an instance last year where we had somebody in our partnership that was apparently not so honest. And we had to go through some stuff. And when we started finding out that these things were going on, we immediately called all of our investors, blocked him from everything, took him out of all of the accounts, and called all of our investors and told them, this is what's going on. This is exactly what's happened. This is what we found out. And we thankfully had nothing happened with our accounts or with our investors' money, but we wanted them to be fully aware that this has happened and we're handling it, and this is how we're handling it. And we want to make sure that nothing has happened to any of your money. And so being ahead of it and making sure that your communication is completely upfront is really the key to being a good borrower, and being sure that everybody feels safe, because that is our number one key when we have somebody else's money. How are we ensuring that they're safe? How are we ensuring that we're giving everything that we promised? How are we ensuring that they know that everything that they've been promised is happening? And how are we just being good stewards of what they've trusted us with?
Guys, I've got to get off, but I just wanted to say to Mychele and to Damien's thing, and there's been a point we keep hitting on here, and that's proactive communication. It's vital, and that could be spread across any aspect of business you want to put it in. I can apply it to personnel, I can apply it to bank relationships, I can apply it to lending relationships, but proactive communication before it has to be done. It builds additional rapport in Damien's situation and Mychele's, and it's just a vital part of the business. And I hope we can get all this resolved, but I'm glad everybody came today. I've got to go meet somebody.
Thank you so much. And you guys, we have monthly meeting for mobile home parks, and Mychele and Rinda, they have weekly meeting for RV parks every week that you can come and learn, and you can actually bring your deal, because people will come and show the deal and they will check it for you for free. Can you imagine that? And Jazz also sitting here, since you can also check with him. And Ella, you have Zoom that you started? I did not see that. Can you drop a link?
Yes, I'll have to go and find it, but it should be on the Sub2 calendar. It's every Friday from 1 p.m. to 3 p.m. Eastern time.
2 hours. Are you kidding me?
2 hours. I
Wow.
didn't think anybody was going to show up because they posted about it on Thursday, and then on Friday there was 130 people in there, and I was shocked. So
Wow.
basically anybody can just come in and talk about deals that they're working on, or any questions that they have about structuring, protection, etc.
So everyone who was asking, you guys, 2 hours every week and 3 hours with Mychele's and 1 hour a month with us. That's incredible. So you guys can get support. Don't trust anyone, even us. If you want to work with us, you
Correct.
still have to verify. Don't just trust.
100%.
And we will not be offended. We promise you. Thank you so much, guys.